All right, welcome everyone to our virtual 2020 PWS Family Conference presented by Levo Therapeutics. Before we begin today's presentation, let's first thank our amazing sponsors, Levo Therapeutics, Soleno Therapeutics, Harmony Biosciences, Rhythm Pharmaceuticals, Saniona, and Novo Nordisk. Their support allowed us to make this conference free for all of our community members, and we are incredibly grateful for their contributions. In today's session, Maximizing Your Insurance Plan, you'll hear about successful strategies for maximizing your insurance benefits with Brian Kalasek, VP of Special Risk for Mutual of Omaha Insurance Company and dad to a young son with PWS. In addition to his work with Mutual of Omaha Insurance, Brian and his wife, Samantha, have hosted numerous One Small Step walks to benefit the Foundation for Prader-Willi Research and are strong advocates for PWS awareness and research in their local area of Nebraska. Without further ado, I'd like to welcome Brian Kalasek.
Thank you, everybody, for joining. I'm excited to talk with everybody today over the next hour and hopefully answer some questions too, and just give you some tips and tricks that I've learned over the past just over 4+ years now. And so hopefully you can get some benefit out of it, and certainly welcome your questions either on just personally our own family and some things as we've dealt with them and figured them out. Sometimes the hard way, sometimes the easy way. And certainly if you have specific questions around, the health insurance side or just benefits in general, trust, savings accounts, those type of things, we certainly welcome all that. And even though this is virtual and it's certainly a little different than in years past, I think this is maybe the third or fourth time that I've presented on some variant of these topics. And doing it in person, it's a lot easier to read a room and figure out kind of where we should take it, and it's a little more difficult virtual as I'm staring at a picture of myself, which nobody generally loves doing, including me. But I'm excited to talk to everybody today and hopefully give you some information that will be beneficial as you navigate this complex world, certainly. So with that, I just reintroduce myself quickly. My name is Brian Kalasek. As Sarah mentioned, I'm the Vice President Special Risk at Mutual of Omaha. The only reason to tell you that is to lend myself some credibility around insurance. And I've been in the insurance world for 13 or 14 years now on various different types of products. Never particularly health insurance, but kind of some ancillary products to health insurance. So I've dabbled in this world and I know a decent amount about it, maybe just enough to be dangerous. So I also wanted to introduce my wife, Samantha, behind me here. I'm sitting in a chair and we're trying to both get on the screen here. But I want to introduce my wife, Sam, for at least the first screen here. Then she's going to go downstairs and watch me, so I don't have somebody behind me staring at me. But she's really the glue of this family and does an amazing job of keeping us all on track, keeping us going in the right direction. Everybody gets to their practice. Everybody gets to their therapy session. Dinner gets made, all of those great type things. So I just wanted to briefly introduce my wife, Sam, here before we jump into the content, and just say hi real quick, Sam.
Hello, everybody.
There you go. And Sam is a stay-at-home mom too, so she really she kind of does it all and keeps us running. So thanks, Sam. Yeah. All right. With that, I will progress to the agenda here. So just wanted to, at a high level here, touch on what we're going to talk about today. I thought I'd start off just giving a little bit of my own perspective on Prader-Willi. I think certainly we hear a lot of mom's perspective, and that's great. Like, I was thinking about this earlier as I was doing a trial run here, but moms really run the show, as most of us all know. They run the show at, driving a lot of the research that happens and the fundraising that happens, and certainly on the home front too with getting stuff done. So I just at least give you, a few minutes of my perspective on having a child with special needs, specifically Prader-Willi syndrome, and how I've gone from, Paxton being born and basically feeling our world was crushed to where we are today, which I think as a family, we're absolutely thriving. So knowing that there's a lot of new parents out there listening that I've been in your shoes and I know how those feelings go, I thought it'd just be beneficial to share a little bit about my perspective as well. With that, we'll jump into the insurance side of things. So insurance is a very complex product, health insurance in particular, and it's massive from a claims paid amount, from a premium amount. It's I think healthcare is one of the foundations of our country when it comes to the amount of money that flows through it. And so it's very complex, but I'll try to break down, at least at a high level, some of the main themes of it. some things that you should look out for, some things that you can think about when you're choosing your plan. Open enrollment for most people who obtain their insurance through their employers coming up here, usually in the October-November timeframe. I know mine's in about 3 or 4 weeks it opens up, and that's the opportunity to sign up for a particular plan if you have a choice, and other benefits as well. So I'll try to touch on some of that stuff. Also touch on state Medicaid, which is a difficult topic, as I'll get into in more detail. Every state manages and runs with their own rules, their own state Medicaid program. So I can certainly give you some insight from Nebraska and how we've handled that. There's a resource that I'll show you here that you can go to find specific information about your own state as well. And then under kind of the insurance coverage heading, we'll talk about 529A ABLE accounts. So this is actually something brand new that I've learned about here in the past year and a half, and it's a great resource. So we'll talk some about that too. And then finally, we'll wrap up with just some estate planning talk and some considerations there. And I'll caveat my talk here at the front that I am certainly not an expert in estate planning. Sam and I put together a plan through a local attorney, but I can give you at least some things to think about as you go out there and find the right person to help you with that. So it's certainly overwhelming. It was overwhelming for us first as we tried to put a plan together, and it's not something fun to think about. But regardless of special needs kid or not, I think it's important that the plan exists. So if the worst case does happen, that your children or child is taken care of. So that's kind of the agenda for today. Again, feel free to shoot questions in as they come in, and I think we're going to try to save them all for the end. But if there's something real timely, Sarah might chime in and throw the question out to me. So with that, I'll get into introducing my family here. So. You've obviously met me already. You've met my wife already. This is the 4 kids that we have, and if you would have asked me, maybe 10 years ago, if I was going to have 4 kids, I would have said absolutely not. 4 kids sounds insane, and I was actually right. 4 kids is insane, but it's so much fun too. And so we've been throwing a few curveballs along the way, and that's to be expected. But I'll kind of run through the kids here just really quickly and introduce you to them all. So Easton is my 9-year-old. He's at the bottom left of the picture there. Ben is standing in front of me, and he's 6. Paxton, I am holding right there, and he is 4. And just to be clear, Paxton was casted in this picture. This picture is about 2 years old, but I just like it. It was at, maybe it was like a year and a half ago. It was at the last FPWR fundraiser that we held locally, where I think we raised close to like $40,000, which we were really excited about, along with some other local families as well. So if you have questions about that, you can definitely reach out to me offline, or we can talk about that at the end. But that was just an awesome experience. And finally, Sophia, who's my wife, is holding there. So Sophia's about 2.5 now. So she's no longer the sweet little baby. She's a sassy little 2.5-year-old girl, but she's a blast. So this is all of our family. Obviously, you could tell we decided to have one more kid after Paxton too, and we're officially done now. My wife really wanted that girl, and I did too. So we thought we'd try for one more, and 4 would be the number. And God blessed us with a little girl. So we couldn't be happier with our family, and they're awesome. They're absolutely awesome. And when we first had Paxton, certainly like the thought of having another kid seemed overwhelming. I mean, we were in the NICU, probably like a lot of you were at certain points, and it was the thought never crossed our mind. And eventually we got to a point where like we feel like we should do one more, and so we did. And I think it's awesome because Paxton and Sophia are about 19 months apart, and they're best friends / enemies too. So they fight, they play with all the same toys, they steal each other's stuff, like all the stuff a typical 2 and 4-year-old brother and sister would do. And then Paxton also has the older 2 brothers that love playing outside and sports, and so they push Paxton to be active, and it's awesome. So I wouldn't change a thing about our family. It's so special, and it's my number one joy in life are my wife and my 4 kids. So that's a long-winded explanation to my family there. So I'll jump to the next slide. I wanted to share this just to give some perspective. The picture on the left is Paxton in the NICU. I don't have to tell this audience, like, Paxton was this essentially lifeless, motionless, super low muscle tone little boy that couldn't feed himself with a bottle and really had no desire to. And I look back at that picture and it, it brings back good memories, but it brings back a lot of tough memories too. And I mean, to be honest, like my wife and I were a wreck, especially in the beginning there. I mean, you're handed this child and you think everything's okay, and then you find out, well, everything's not okay. And dealing with that is difficult, certainly. And, I look back at myself in that picture, and other than I had way less gray hair, which maybe that's what 4 kids do to you. But I didn't even realize at that point, like how great Paxton and really our whole family would be doing at that point, And so I look at Paxton today, and he just turned 4. He had his birthday is September 18th. So he just turned 4. And he started his 2nd year of preschool. And if you can, I don't know if, depending on how big your screen is, you may or may not be able to see his writing, but he wants to be a ninja. His favorite subject is singing, which I wasn't even sure was a subject, but Paxton loves to sing. Paxton loves to watch movies. And then for some reason, we have an insane amount of leftover Halloween costumes still in our house. So Paxton loves to dress up in like the theme of whatever he's watching. So lately we've been watching a lot of Sandlot. We've been, I'm trying to think of what else. He loves watching like karate movies, Karate Kid, some of that other. So like, that's like his thing. And hey, if that makes him happy, like I'm 100% for it. So he's such a happy little boy. And I'll just take a quick second to talk kind of about Paxton and certainly Paxton has struggles. Low muscle tone. And I think even for Prader-Willi, Paxton has really low muscle tone. He walked right about his 3rd birthday. So he's been walking about a year. But I mean, we've been so lucky in a multitude of ways with the doctor care that, we've received, with the therapy care. Paxton does horse therapy, which I think generally kids can't start till they're probably like 2 or somewhere in that range. But right when Paxton turned 2, we got hooked up with a local place called Hetra, which is our local, therapeutic riding facility. And that's just like his favorite thing. Every Monday we go there and he gets to ride Waldo. He calls him Dodo. But he's just like, he's thriving beyond where I ever expected a 4-year-old little boy with Prader-Willi to be at this point. And like I said, he certainly has his struggles. Like, Paxton's never going to be a pro athlete. That's fine. He comes from a long line of not pro athletes, so that's certainly okay. But at the same point, like I'm so excited about Paxton's future. And if you've had a chance to watch any of the clinical trial readouts here over the past couple of days, I was able to tune into the Celino call yesterday on DCCR, and just hearing Dr. Miller talk about what this is doing for kids. It's so exciting. And then there's the Levo drug out there too, and like also so exciting. So like my thing all along is I to get some sense of peace, like I wanted to do as much as I could to give Paxton the best opportunity at life as I could. And so my kind of thing all along is like, I wanted to understand the research the best I could. I mean, I'm in insurance, I'm not a biologist, but to understand the research, understand how things are progressing, and just at least have that carrot dangling out there of, there's help coming. And so I think, when I go to bed at night and I think about Paxton and I think about Prader-Willi and I worry about the future, like I at least have like some confidence in that, like there's things coming that are going to help change the course of Prader-Willi for our kids today. And like, so that hopefully gives you some peace here over the past couple of days, as you've hopefully been able to tune in to some of the sessions and hear about these things. And it certainly gives me a lot of peace too. And one other, obviously this isn't an advice session, but if I could offer one little bit of advice, it's, I was guilty of this in the beginning, is I thought too far into the future. I thought, well, what does Paxton's life look like when he's 20 years old or he's 30 years old? There's enough to worry about right now with where your kid's at, to not have to worry about 20 years from now or 30 years from now. Like, I think our kids are going to have great lives. Like, I know it. And it's going to certainly be for Paxton, like his life will be different than my other 3 typical kids. Like, it's just, he's going to have struggles that they don't face. And we'll be there to help him, and his brothers and sisters will be there to help him. And that's just how it is. But, you know, my job as a parent, Sam's job as a parent, is to just give Paxton the absolute best opportunity possible for being successful in life. And so that's really what we intend to do. That's what I think we've done up until this point. The other thing I would add is that has helped me is just doing things within my control to just to feel you have some sense of control over the situation. Like, it's hard. Like, we can't, at this point, we certainly can't change the underlying genetics. We can't change the course of the disorder, but there are things we can do, right? So for me, it was diving into like understanding research and making sure Paxton was getting the best doctors and the best care and all that stuff. The other thing that Sam and I jumped to is like fundraising. Like, that's a way to directly impact our kids' future for the better. When you look at like some of the stuff that FPWR has funded, Sarah and I were actually just talking about this before the call, but they funded, I believe it was like, at least in part, like the phase 1 trial for DCCR. So without the funding from parents like us raising that money, like those type of things don't happen. So I felt like there again, like, even though it's a small piece, maybe you only raise $1,000 or $500, but whatever it is, like, it's super important as FPWR and others, in conjunction with the drug companies, continue to push along the development of these therapeutics that are going to have a really positive impact on our kids' life. So again, I think I probably overtalked this slide a little bit too, but I love the difference between the slide on the left at Paxton's birth and then the slide on the right and where he is today. And like, that smile's legit. Like, he's got the cutest little smile, and he's generally a pretty happy little boy outside of the normal, 3 and 4 year old tantrums and meltdowns. But anyways, I'll jump to the next slide here. Oh, actually, Sarah, if you want to run that first poll, just curious as we, oh, thank you. And I was going to actually add, but you added only to that. So thank you. So is your child the youngest, middle, oldest, or only child? Just curious kind of the group we have on the phone here, where your child falls. Let me take a quick water break here.
Looks like everybody's answered, so I'll go ahead and end it and share the results.
Oh, there we go. Youngest. Well, that makes sense. Certainly, only. I was guessing there's probably going to be quite a few onlys on there, or youngest. It's there's one oldest, 5 middle. Okay, so yeah, I mean, we would, Sam and I would fall into that middle category, and I think certainly as we had Paxton, obviously we had 2 older boys already, so we kind of knew what to expect, and we always find out what gender we're having. So it wasn't a surprise that we were having a boy, and we knew what to expect. And so, well, we thought we knew what to expect. And then Paxton was born, and kind of threw everything into chaos a little bit there too. But I think one of the best decisions Sam and I ever made, and I mentioned earlier, is having a 4th, and just kind of having Paxton book in by 2 older brothers and a little sister, and they'll certainly be able to help him, and he'll help them as they all grow up together as well. So, well, thank you for sharing. I appreciate that. Jump to the next slide here. There we go. So finally, for kind of the talk about my family part, my hope for Paxton's future. So when I talk about Paxton to family and friends, or people with, that have kids with Prader-Willi, or people who've never heard of it before, I always say we want 3 things for Paxton. We have 3 goals for Paxton. So our first goal for Paxton is that he's able to live independently. Our second goal is that Paxton has a long, fulfilling life. And so for me, this means like he's able to have employment. He's able to work, and I don't care what he does, but I feel like there's a lot of sense of responsibility and importance that comes with work and being able to do that. So whatever he wants to do and is able to do, we'll 100% support. In addition to having, important, deep relationships just outside of our family too. I think those 2 things, if we're able to accomplish, some semblance of that, would fulfill that bucket. And lastly, and most importantly, we just want Paxton to be happy. So like I said, Paxton's life is going to look different than our other kids, and that's okay. But we want him to be happy. We think he's happy now, so we'll check that box for now. But we want that to continue, obviously, through late childhood, the teenage years, into adulthood. And Sam and I, and really our whole family and extended family, will do whatever we have to do to get there. So I love this picture. This was actually his last haircut. We probably should have wiped his mouth off there. He's got some food residue on it. But this was, I love this little picture. So anyways, and so with that, that's kind of the introduction to my family and just my perspective on Prader-Willi and how we as a family have gone through this and gone from really a state of despair, probably for lack of a better word, early on to really thriving today and being 6 pretty happy people. So with that, I'm going to jump into the health insurance section of this. So I like this. If you've seen Parks and Recs, you'll recognize this guy, but I thought it was kind of a funny quote. So I still don't know what a deductible is, and at this point I'm too afraid to ask. So this is your opportunity to ask today. These terms are confusing, right? And if you're not dealing with it all the time, it certainly is extra confusing. So just again, to reiterate what we're going to talk about today, just high level, this is the basics of health insurance. Walk through kind of some different plan models, different functions within those plans and how they work. We'll talk a little bit about state Medicaid, and then we'll end this section talking about the 529A ABLE accounts. I just thought this statistic was interesting, and we're not going to run a poll off of it, but you can see where you fall in this bucket. So this is the sources of health insurance in the United States. So how you obtain your health insurance. You can tell more than half, 54% of people get their insurance through their employer. So that being the case, that employer is really making the decision for you, for the most part, around what your plan structure will be. You don't have a lot of say in what type of plan you get. Now, sometimes there will be maybe different deductible options, maybe a high deductible plan versus a lower deductible plan. But really that employer is making the decision for the most part for you for, over half of the country. Then you can see the other buckets that people fall into, 13% being uninsured, Medicaid at around 17%, Medicare at 16%. So that's going to be for folks 65 and older. And then people buying private insurance, and that's generally on those exchanges. If you've heard of the exchanges before, that's where those people are purchasing that insurance. My talk should be high level enough that really it'll apply to most plans out there. Now, Medicaid and Medicare not included, well, military as well, because they're on something called TRICARE. But for the individual private insurance, as well as the employment base, which captures a good chunk of the insurance market out there, this will apply pretty broadly across that spectrum. So first I want to talk about kind of the 2 main types of health insurance that exist out there. The first one being something called the Health Maintenance Organization, or HMO. So these were more popular in the past. They've kind of lost some ground to the next topic I'm going to talk about, which is a PPO. But think about this type of plan is really limiting your coverage to a very defined set of doctors. So the benefit of that is that usually your costs are much lower because the charges from the doctor are much lower. So the plan's able to charge less for the services. The downside of a plan like this is that it's difficult to go out of network. The other kind of negative of it, maybe not a negative, but certainly makes things more difficult, is that you have to obtain a referral generally through your primary care provider to see other doctors. So if you need to go see an ear, nose, and throat, or an endo or something like that, an orthopedic type doctor, you have to get that sign off from your primary care before you're allowed to go see that doctor. So there's certain advantages to this as well. If you live in a geographic area that has all the doctors you need, this plan would be, pretty beneficial for you. If you don't and you're having to travel, that gets more difficult. So again, this is a decision a lot of times that's made at the employer level and not necessarily a decision we as potential claimants have, but it's something to consider as you look at your plan and really understand what type of plan that you have. So the next type of plan, and this is by far the most prominent type of plan that exists out there, is called a PPO, or Preferred Provider Network. So this is a type of plan that contracts with medical facilities and providers and basically builds a network. And so they'll go out and they'll negotiate preset reimbursement rates with doctors. So let's say a doctor normally charges $250 if you just walk in the door without insurance. If you go see them through this network, then maybe the bill charges are only like $170 or something like that. So because of the scale and the mass of these organizations, and this is like a lot of times like you think like Aetna or Blue Cross, things like that. Those are generally PPO networks. Because of the mass and scale and the amount of claims flowing through them, those doctors are able to take less because the volume is increased. So they're able to make what they need to make to run a business and be a doctor. The big benefit for this, and we've certainly realized this as well as we've traveled to see doctors. We go see Dr. Miller in Florida once a year. We go see Dr. VB out in Philly. And in fact, Paxton and I are flying to Philly next Thursday to see Dr. VB on Friday, and knock on wood, he'll hopefully be done wearing a brace. So he was going off on a tangent, but he was casted in a hard body cast for a torso cast for about 18 months. And then we've been in a brace since last November. So our hope is that it's corrected enough that we're no longer having to wear a brace here in the future. But anyways, my point being is that through a PPO network, you're able to go out and see out-of-network doctors and still get some savings that you wouldn't otherwise. And so that's really one of the main benefits, especially as a lot of times with our kids, we are traveling to see doctors maybe, and within an HMO, they may not have the set of doctors we need to get the care that we need for our child. So this is actually pretty common today, and you started seeing high deductible health plans, and you may have seen that terminology before. We started seeing these become more and more prevalent, in the last 5 to 10 years. And that's because, as we're all aware, like the cost of medical care increases, and it's called like a trend increase. So overall service, the same service one year versus the next year averages anywhere from like 5 to 7% more every year. So you imagine you do that for like 5 years, and you just get a compounding increase to these medical costs, and nobody's really found a great way to control it. So one of the ways they've tried to control the cost of insurance is by offering these high deductible plans. And so the government sets out what is defined at a minimum, at least, for a high deductible plan. And so they've defined that at $1,400 for an individual or $2,800 for a family. So that's the minimum. A lot of the times it's pretty significantly more than that. My plan at work, we have two options. One is a $750 individual, one is a $1,500 individual. So that second one qualifies as a high deductible plan. But you may have seen plans that run, $2,000 individual deductible or $4,000 individual deductible. So as those deductibles increase, like the premium, the cost of the plan goes down for you, but your out of pocket is going to be much higher on the front end. And it's certainly something that you need to consider when you're looking at, open enrollment, or if you're just looking at purchasing a plan on the market. Understanding what your, I'll call it worst case scenario for spending dollars every year is really important. So that's understanding what your deductible is. And then we'll get into some more terminology here in a second, but then also understanding what your max out of pocket is. And if you understand those things, you know what your worst case scenario is for a particular year for your health insurance cost. The neat thing about a high deductible plan is when you have that, it qualifies you then for something called an HSA, or a health savings account. So an HSA is something that you fund. It's basically, think of it as like a savings account. And a lot of times it's actually set up like at a bank. So it's a savings account that you fund, you put money in there for the intent of paying for medical services down the road. Sometimes actually you'll even see your employer, if you receive your insurance that way, your employer will contribute to that as well. So here is your planning for next year and what your insurance costs are going to look like. And it's probably a relatively safe assumption, at least for us personally, I'll speak to that you're going to hit your deductible, and you're probably going to hit it early, and you're probably going to hit your max out of pocket, and you're probably going to hit it in the first half of the year. But I think we've done that every year in the last 4. When you start talking about, physical therapy or occupational therapy, speech therapy, like those things add up really quick. Those are $200 and $300 a pop. So you're going to hit that really quick. So if you're trying to plan for next year and figure out, well, what is my budget for healthcare? If you can fund this HSA, then there's a tax advantage to you because you fund that and receive a tax advantage on it. And then there's no, that money can grow. Think of it as like a savings account, and there's no tax on the growth as well. The other cool thing about HSAs is that you don't lose the money. So if you're familiar with an FSA, a flex spending account, that's the type of plan where you fund it. And then if you don't use the dollars by December 31st, you lose that money. With an HSA, you own that money forever. So you can build up an account balance in there of, $10,000, $20,000 if you're not spending the money, and it will continue to roll year over year. It's really a nice way when coupled with a high deductible plan to at least have a savings in place should like a worst case scenario occur and you all of a sudden get a bill for a $2,000 deductible that you weren't necessarily counting on. It's a way, and like I said, it's your money. So you get to keep it, even if you change employers, like you own that account. So I'm going to run through just at a high level some of this terminology. Most of you probably know this, but I think it's worth defining because, at least for me, like I sometimes have to like re-look up what stuff means because it's confusing. And if you're not doing it every day, it's certainly not part of like our normal vocabulary. So we're going to run through just a couple terms real fast. So the first one being deductible. We've talked a lot about this already. This is just simply the amount of money you owe for healthcare services before your health insurance plan begins to pay. So in this example, Jane's deductible is $1,000. She goes, sees a doctor, have some services done, whatever it may be. She gets a bill for $1,000. So she's paying all of that before insurance pays a dime. So coinsurance. So now Jane has met her $1,000 deductible and she rolls into the coinsurance portion of the insurance. So this is where insurance actually starts helping you pay. So this is the percentage of allowed charges for covered services that you are required to pay after you have fulfilled the deductible. So most plans have like that 20-80 split there that you see at the bottom. Sometimes you see like a 15-85, but there's variance in how the policy is set up and how the split goes. So in this scenario, Jane's reached her deductible. She goes to the doctor's office. The doctor bills her $115. Well, now insurance is going to pay 80% of that. Jane is now only responsible for 20% of it. So in total, she only now owes $23 on that to take care of the $115 bill because insurance has paid the balance. Last two vocabulary items I want to touch on is out-of-pocket max. So again, this is really your worst case scenario on a year. So the insurance policy that you have limits your financial liability every year. And that limit may be set at $6,000 or $8,000 or $10,000 or whatever it may be, but there is a cap on the maximum amount that you have to pay every year. And it's called your out-of-pocket max. And so understanding what that is and budgeting for that is important. If you know that you have a kid who's going to need a lot of services next year, maybe you have a surgery lined up or surgeries, maybe your child has scoliosis and you have to do the casting, whatever it may be, like those things add up really quick and you'll hit that max really fast, especially when you start throwing in all the therapies on top of it. So understanding what that is, budgeting for it, understanding your policy is really important. The last term that I'll define for you is a copayment. And so a lot of you probably have this before. You go in and you see a doctor and there's a $15 copay or there's a $20 copay. I know on our plan, emergency room, because I've used the emergency room a few times for a variety of kids, as you can imagine with 4 kids, there's a $150 copay on the emergency room. They're certainly trying to get you to use like an urgent care if you can, as opposed to emergency room. But so every time you walk in the door, regardless of the services that are rendered to you, you're going to get a bill for $150 plus the services on top of that. That's just called the copayment. That's just the cost of doing business. So those are kind of the high level terms. Like, again, if you have questions or something doesn't make sense, go ahead and shoot it into the question section. But with that, I just want to touch briefly on another topic that is near and dear to all of our hearts, which is prescription drugs. Prescription drug reimbursement by your insurer varies greatly. So they each have what's called their own formulary, where they basically have drugs generally defined out into 4 different categories. And within those categories are what your cost is. So if it's a generic and, type 1, you're reimbursed, it may just be covered, or it may be like $4 or, something really cheap up until, the stuff at the bottom of the list, which is the expensive specialty drugs. And unfortunately, or fortunately for us, we're very lucky that genotropin or growth hormone in general is available, but at least for my plan, growth hormone, and we use genotropin manufactured by Pfizer, falls in that most expensive category. So this is the prescription drug bucket that is $120 a month co-payment from us. So Sam and I would have to pay $120 a month. But Pfizer, and I'm guessing most of the drug companies that manufacture growth hormone have this, and if they don't bring it up to you, you should definitely ask, but have a Copay Assistance program. So what this is Pfizer funds an account for me every year. And within that account, I can pay, so they keep the money, they don't just give me the money, but I can pay the copays out of that. So they basically, what that does is save me the roughly $1,400 a year that I don't have to pay these copays. So as we all know, like every dollar saved is a win in my mind. And one of my favorite hobbies is fighting with insurance companies. But if you don't have to do that, you certainly don't want to, because it's always a long proposition to get them to see what you're trying to convince them of. But so asking about this, if they're not bringing it up, I think, remember back, almost 4 years when PAC started, like they brought this up to me. So they were very good about it. Like they know how this works. The other tool that I wanted to make mention is the one on the top there, but it's a cost comparison tool called GoodRx. And if you go out there and look at this, it's actually a really, really powerful tool. And not even for Prader-Willi drugs, but like whatever drug that you're looking for, maybe you're trying to fill for yourself or your family, go out there, type the drug in, and then you can set some parameters around it. But what it essentially does is it goes out and looks at all the pharmacies in your surrounding area and will give you the cost for all of them. So it is shocking the variance that you will see in a cost of a drug. So like a simple drug like Synthroid or something like that, or a thyroid or Nexium granules, which Paxton was on at one point for reflux, like the amount of variance that you would see, like at one place it'd be $10, and another place it'd be $200. We did a drug called HCG. So Paxton had undescended testes, like most boys with Prader-Willi syndrome. So we did 2 rounds of, I think it was called HCG, back when he was little. And at Walgreens to fill it, it was, I think, like $300 a vial, and you had to buy a vial. And then at one of the local pharmacies called Kohl's, it was like $120. And it was shocking, the difference. So really use that tool. A lot of times too, you can find coupons out there. So it'll give you all the pricing, and it says like, well, this place has a coupon. You click on the coupon, you save it to your phone, or you print it, you bring it in, and you get the savings. It's pretty remarkable. And so I always try to tell people that, even people who like don't have kids with, non-typical medical needs, it's really an awesome tool to save money. And if you have a local Costco too, honestly, Costco is usually about the cheapest when it comes to pharmacy drugs. Not always, but a lot of times I found that they're really cheap. So anyways, just a good tool, and hopefully they take away for you. The other thing I just wanted to mention, I'll do it quickly, is for kids who are on approved state Medicaid, you really have to be, not cautious isn't the right word, but you need to think about, if you're going to see an out-of-state doctor, most likely that state doctor or that doctor out of state is not an approved Medicare provider for your state. So you may be having to pay out of pocket. So just the consideration, as I know a lot of people go see Dr. Miller, and she's not approved, at least for Nebraska state Medicaid. So if we hadn't met our deductible yet for the year, we would get a bill. That's not that much. And but it's just worth mentioning, and something to think about as you look at doctors kind of outside of your state too, because I know a lot of people do that. The other thing that I'll add to this, and then we'll, I think, kind of wrap up the health insurance piece of this here, is that a lot of people don't know this. You can negotiate your bills. So it doesn't always work, but if you get a bill, you got to be careful what doctors you do. We don't do it with our therapists, but if we get a bill from like an ENT, an orthopedic, whatever it may be, you can negotiate bills on behalf of your child or yourself or anybody for that matter. So what I will do is I'll call up say you get a bill for like $200 or something like that. I'll call up the billing office for the doctor and say, would you be willing to give us a 10% discount if we pay in full right now, or you pay in cash right now, or credit card? And probably like 7 times out of 10, they'll do it, or they'll give you something. So it's always worth asking the question. And that's why I wanted to mention that. Okay, so let me jump into state Medicaid here, because we got about 20 minutes left, and I want to leave a bunch of time for questions, or as much as I can. So state Medicaid, I think I mentioned this before, it varies by state, and the rules and regulations and laws surrounding state Medicaid vary by state. So it's difficult for me to speak beyond anything other than Nebraska, because Nebraska is where we live and it's really all I know. The thing I do want to call your attention to is the second bullet point there, the also called. So in Nebraska, there's a waiver program called the Aged and Disabled Waiver, or A&D waiver. Other states call it different things. So there's TEFRA, which I'm not 100% sure what that stands for, or the Katie Beckett program. All of these are state Medicaid waiver programs. And so what that means is Paxton is approved through the A&D waiver for Medicaid. And so the cool thing about this is it's not contingent on the parent's income. If it was contingent on income, you have to be at, whatever percent of the poverty ratio to qualify, like we wouldn't be there. But through this Aged and Disabled waiver program, Paxton gets access to a handful of services. And so Paxton is approved on state Medicaid for Nebraska. Now, I know Nebraska is a pretty easy state to get approved. I know other states have like waiting list, thousands and thousands deep. So the link at the bottom there is something that I found and was kind of playing around a little bit with, but kidswaivers.org. And so that's going to provide more specific state data for you. And you get some information on there about what your state requires, or if they have like an A&D waiver program or a Katie Beckett program. And so with that program, at least for us locally, we get access to state Medicaid. So Paxton has primary insurance through my employer, and then he has state Medicaid as a secondary payer. So up until, 2 weeks after Paxton's birth, or 4 weeks after Paxton's birth, we were retroactively approved. And so I've actually never got a medical bill for Paxton. And so that's obviously, you can imagine that's a huge, probably $4,000 or $5,000 a year worth of savings on top of if we didn't have approved state Medicaid. So it certainly has been beneficial for us. But again, it's very state dependent around the resources that are available in that state to offer the benefit. But I would encourage you to go out to kidswaivers.org and look for additional information out there. All right, I'm gonna keep moving here so we don't we have some time. So the last part of kind of the health insurance, and this isn't necessarily health insurance, but this is something I found out about a year and a half ago. And so there are these things out there called a 529A ABLE account. And so some of you that have children already, you may have started a 529A savings account for that kid for college, a college savings account. And every state has the 529A college savings account and the 529A ABLE account. In Nebraska, it's called N-ABLE, like E-N and then ABLE. But every state runs their own. This is really, really cool. And so basically what you can do with this is you set this account up. It's super simple. I gave a link at the bottom there. It's www.ablenrc.org. And so that will provide specific information about your state, but you can actually sign up for any states. You don't have to use your own states, but sometimes there's some tax advantage to signing up in your own state if you're a resident of it. But what this is it's a way for you to build an account that the government won't look at to a certain degree, up to a certain dollar amount. So as these kids get older, if they need government assistance, if they need to be approved for certain programs, if they show they have too much in savings or earnings or income, like they're not going to be eligible. So this is a way to shelter a certain amount of money. I don't know if it's state dependent. I think in Nebraska it's $100,000 basically, but you can shelter in this, and those dollars won't count against them when it comes to looking at future benefits for them. So the other cool thing is you can basically use this money to pay for anything for your child. So I listed a few things here. Disability related expenses, including but not limited to education, housing, transportation, assistive technology, employment training, support, financial management, healthcare expenses. I've used it when we go fly and see Dr. Miller, like if I know that his plane ticket's going to be $500, I'll throw $500 in the 529 account. I'll buy the plane ticket and then I'll reimburse myself back out of it. And basically it's just a transfer of money. But what that does is for the state of Nebraska anyway, you can then deduct that $500 on your taxes. So it lowers your overall tax liability for your state taxes every year. The other cool thing is that the dollars, when you withdraw the money for a covered service, so whatever that may be, you can, that money grows tax-free. So it's in the account, it's growing tax-free. And you're able to withdraw it, and it really can account to like some pretty significant savings for you if you if you fund things through this account. So the websites, I think, do a good job. You find your local state website. It does probably a better job of explaining what this is than I do. But these are really good tools. It's a good way to save for your kid. You can use them. Like originally I set up a college savings account for Paxton, and then I met with somebody like, you really should do this Enable account because you can fund so much more, plus you can fund college out of it too. So it really is a multi-purpose approach. And if you go to that website, you can find some specifics for your state and see what kind of tax advantages you can get. All right, we jump to the next slide. So estate planning considerations. So kind of my disclaimer here from the beginning is this is a really complex issue that needs assistance from an attorney well-versed in special needs planning. I am not that attorney. Sam and I put together an estate plan. It is confusing. It's not fun to work on. It's never fun to think about, well, if I die, if my spouse and I both die, like what's going to happen to my kids? But I feel a lot better knowing that we have a plan in place now to fund the trust through, our savings and or life insurance, that my kids will, the person taking care of my kids will be able to, pay for them and pay for their lifestyle and help pay for college and kind of get them to adulthood if, something tragic would happen to my wife and I. So that's why you do an estate plan. Regardless if you have a special needs kid or not, like it's important that you have that. And that's even just beyond like a will. Like we've all heard of like wills before, right? But this is really more comprehensive than that. And so we were able to find somebody locally that helped us with our estate plan. But then also we wanted somebody that had experience in drafting estate plans and specifically special needs trust. So like I mentioned before with the Enable account, you have to be able to shelter the money that you save for the kids so that the government doesn't count that money against them should they reach adulthood and still need some level of help and some level of services. We don't want them to have to deplete, if they had a regular savings account, the government would make them deplete that before they were eligible for services. And so getting together with somebody who really understands that world is super important. And so I would encourage you to talk to maybe other special needs families that that have done this, or I can certainly connect you with somebody as well if you want to reach out to me directly, and I'll share my info here in a second. But it's important and it's not fun to think about, but it's just something that you have to do. And so I think I covered kind of a few of these points here too on my last slide. But a special needs trust, the trust is just simply an agreement by which one person, the trustee, holds the property or benefits for another person, the beneficiary. And assets in a trust are really counted as a resource as opposed to anything else. So again, when the government's looking at what does this child have, they're not going to count these things against them if it's done correctly. And so again, that's why you need the attorney who really understands what they're doing. And so with that, I think we got about 11 minutes left, so I'm going to wrap up. I want to thank everybody. I wish I could see everybody, and I did want to end with just encouraging you next year, if you're able to go to the FPWR conference in person. Like Sam and I went to our first one. Paxton was about a year old when we went, and it was in Indianapolis, and it was just like an absolute life-changing event for us. And like we just met people who like got it, and for a couple days, I usually cry like not on virtual things because that's kind of weird, but I can't help it now because it's just it was such an amazing experience, and we've been able to connect with these families. And, a lot of the kids are younger. And so being able to connect in a rare disease world where maybe there's nobody around you or you don't know anybody locally that has Prader-Willi syndrome or his kid has Prader-Willi syndrome, like being able to build a community of parents that are going through the same thing and having the same struggles and the same successes and having a place to share that is awesome. And the conference is just fun too. Like it was in New Orleans last year. It was an absolute blast. I'm sure Chicago would have been great. It's a bummer that we're all not there, but at least we're able to meet this way. So that'll be my last piece, is just to encourage you. And so I'm also maybe against my better judgment, but it's all right. I'm giving you, this is my cell phone number there, and then also my personal email. If you ever have any questions, you're more than happy to call me or text me or send me an email. I can't promise you I can help, but I'll certainly do what I can to try to help you. So I think with that, I'll throw it back to Sarah to see if we had any questions.
Yeah, thanks, Brian. That was great. We have some questions. I'll go ahead and start with the first one. He said, hello. My son is 11 months old. He just got renewed Nebraska Medicaid, and he was on full coverage since birth. How can I make sure that he still gets the full coverage with the renewal? Does that just automatically renew without changes to coverage?
Yeah, so you have to reapply, at least in Nebraska, and so this is the state I know. You have to reapply every year, and you're not necessarily reapplying. They're sending you the paperwork and requesting the appropriate documentation to you to make sure your child still meets the eligibility requirements for state Medicaid, and that generally consists of sending things like medical records, therapy notes, maybe genetic confirmation of PWS, whatever that may be. And so, well, I mean, once you're approved, then you're approved for a year and you have the full Medicaid benefits for that entire year. Sam and I just got Paxton reapproved. And quite honestly, it's all confusing. Like, I don't know why they're approving us. I just send them every medical record I have. Maybe it's just like overwhelming because they get this, like huge stack of paper and they're just like, oh yeah, this kid definitely. I don't know, but we do get approved every year. We have so far. And we're very fortunate for that. But yeah, it is an annual renewal. But once you're on Medicaid, it's full Medicaid. It essentially, at least for Nebraska, takes care of all the expense.
Yeah, I know with experience in Indiana, ours, I think it's for 3 years.
Okay, that's nice.
We have someone who comes quarterly and they see our child to make sure they're still disabled. So we like
no magical cure in the past 3 months. I guess you're back on.
Like, can you just put a note in there that this is genetic?
Right. That's certainly like frustrating, but I guess they have hoops they have to jump through. So as long as you get approved, that's what matters.
Okay, the next question. We are in New York and trying to get horse therapy covered, but Medicaid says it is not. How do you navigate this?
Yeah, so that's a tough one. It's not covered here either, and so our primary insurance and Medicaid, state Medicaid won't cover horse therapy. So I think there's maybe not been enough studies done where it's an approved therapy. So we pay out of pocket for that. So that's, I guess I lied when I said we never have any medical expense for Paxton. That is our medical expense. But, I looked at it like this, like, we're able to manage this where we're not spending a ton of money for Paxton's care because of the insurance that we put in place. This like horse therapy makes him so happy. Like it's his favorite thing in the world. And he doesn't even think it's therapy. He just gets to ride around on a big horse and be strong and powerful and like throw rings at things and like have a sword and hit beanbags off sticks. And like, he just loves it. So we just do it. But I know our local one, it's called Hetra. They do have programs in place for people who maybe can't pay 100% or can't pay at all. So like, I would encourage you to reach out to them and just see if they're willing to put together like some sort of plan. Like at least our place, like the people are absolutely amazing. Most of them are volunteers. Like they're just trying to like pay the bills and break even. Like they're not in it to make a profit. So if they can help a family out that's really like passionate about getting their child into this, like I know at least for our local organization, like they would love to do that. And they have a process in place for it. So I would recommend at least reaching out and seeing what you can do. I don't know of anybody who's had horse therapy approved by insurance. I think that's a pretty difficult one to do.
Yeah, I've understood that at some point it's possible to get covered if there's a PT or OT working with the child on the horse.
That could be, yeah.
Maybe they could bill it as PT, but I think reaching out to the horse facility and asking them about scholarships is a great idea.
Yeah. That's probably an easier approach than trying to get insurance, but it might be worth pursuing both options.
Somebody asked if that could be covered by an FSA account.
That's a good question. I wouldn't want to say yes and then you go do it and the government dings you if you get audited. I would certainly say it's worth looking into. You can fund it out of the 529A Enable account. And so that's how we do it. Because then at least you're getting some tax advantage to the dollars that you spend. And I think for Paxton annually, he rides once a week. We probably miss a few weeks here or there. It's probably like $3,000 a year, somewhere in that range is what it costs Paxton to ride. Some of those, like Hetra will do like a fundraiser every year where if you raise a certain amount, like they'll give you so many free sessions too. So like if you have family and friends that want to support you or support your child, like maybe doing a fundraiser, and if you can raise like a couple grand, they might throw in the year for free or at least half a year for free, and it's somewhat mitigate your costs. So I can't like promote horse therapy enough. It's like his favorite thing. plus it's therapy, so it's awesome. So like, yeah, anything you can do to like get your kid involved with it, I would totally recommend.
Yeah. Somebody said, could I see the slide for the ABLE account one more time?
Yep.
And another question about the ABLE account, can you roll a 529 into a 529A?
Yeah, you can. So I did that because I originally set up Paxton. I didn't want to like just assume Paxton was not going to go to college. So I was like, well, I'm going to set him up a college savings account. Like that makes tons of sense. And I still think Paxton's going to go to college, but funding it through the 529A ABLE account makes way more sense because it just gives you a ton more things that you can pay for with that money now, in addition to college down the road if you want to use it for that. But yeah, so transferring. So my point being, I set up the college account for him. I think by the time I found this out, I probably had not a ton, but maybe $3,000 or $4,000 in there. So for Nebraska, it was super easy. It was just a form you fill out and you send it into whatever bank processes these things. And then, you know, you make sure you have an ABLE account open and you're all set up, and then they just transfer the money over. So yeah, you can totally do that.
Okay. Another 529 ABLE account question. Is getting the 529 ABLE account better than using a high deductible plan with the health savings account if your available PPO doesn't have out-of-network benefits?
Yeah, that's a good question. I mean, the 529 ABLE account, you can pay for healthcare expenses with it, but you can also pay for like so much more. For with an HSA, you can only pay for healthcare related expenses. Like you couldn't pay for that plane ticket to fly your child down to Florida to go see Dr. Miller or whatever it may be. Like it has to, with the HSA, the universe of what you can use it for is much more finite, where with the 529 and ABLE account, I mean, I haven't been audited, so I'm not a tax lawyer, so I'll caveat it with that. But I've used it for all, like you could go buy diapers with it, and like that's a covered expense because that's a living expense for Paxton. So it's much more broadly. So like again, like talking to, as you're doing like an estate plan, talking about ABLE accounts and you know, certainly your state may have different rules in Nebraska, so you have to be careful there and do your own research, but it's certainly worth looking into because it's your money, you know, and it gives you a kind of a more broad spectrum to spend that money on.
Someone asked, does funding a standard 529 account count as income for your child when being considered for Medicaid?
That's a good question.
I always feel like err on the side of caution when it comes to that.
It might. I mean, I think that's part of the purpose is from the ABLE account is that it shelters that money to a certain degree from consideration when the government's looking at the assets of the child.
Yeah.
So I like, again, that starts getting to like the more complex side and it may vary by state, but like the ABLE account is just, for me anyway, like it makes total sense for Paxton because we can use it for anything.
Yeah. Another question about the ABLE account. Is it as hard to justify as the FSA account where allowable expenses need receipts and sometimes allowable expenses are rejected?
So I save receipts. I just created like a file on my folder. And when I get a receipt, I like take a picture, or like I get an invoice from Hetra, our horse therapy, and I'll just save it in a folder and I'll save it. Now, like I haven't been audited, but you know, we're also not talking like huge dollars here that are probably going to send up red flags. But if I was audited, I have all the receipts of, mostly I use it for Hetra because that's a higher dollar amount thing. But I have those things. And so you're not seeking approval from an ABLE. You're basically just, you can pull the money out whenever you want. There's no check that you're using it for an appropriate thing. The only check would be if you got audited by the IRS and like, well, you went to Vegas and you lost like $5,000 playing roulette. Like that's not a covered expense for your child. But as long as you can justify the expense and you have a receipt to show, you know, it was diapers or it was horse therapy or it was a medical bill, then you're going to be okay on it.
Another question, our insurance plan caps OT, PT, and SLP services at 60 per year.
Yeah.
He will soon be 3 and lose early intervention. Is that common, and what's your advice?
Yeah, so ours is about the same limits. I don't remember exactly what they are. Like here, we're a little bit lucky because we have state Medicaid. So he essentially has unlimited therapies because we'll burn through the PT and the OT and the speech, you know, probably the first like 60% of the year, but then the rest of it gets billed to Medicaid, so it doesn't hit us. So 2 things that I've done. I work for a large company. There's 5,000 people. So I call every year and I complain to our HR manager or HR director that this plan is not set up for a kid who has ongoing, like an underlying genetic condition that will need care, some level of therapy for the rest of his life. It's set up for somebody more so that was like in a car accident, right? And you have to get like 15 therapies or caps you at 60, but it's not set up for a kid that needs like really hardcore therapy for a long time. And so I complain to them every year. Now I haven't been successful, but I still complain every year, maybe because it just makes me feel better. If you're not able to do the Medicaid piece and your HR is unwilling to maybe look at revising the plan for future years, the other option you have is you could, I would, if you want to continue with therapies, I would reach out to who you do the therapies with. So if you're willing and able to pay cash, like they'll usually give you a pretty significant discount on it. So it's worth asking the question. Now that's not ideal because that's money out of your pocket, but if the therapy normally charges, let's say like $300, but they'll agree to do it for like $100 for you or 120, and maybe you like space it out so it's not every week, but it's every other week or whatever it may be. Like you can try to figure out like how you get through the year until you get to January, and then you start your numbers back over again, and you can keep going. So yeah, that's a tough one. You're limited by the language in your policy. So really the best option would then just to be reach out to the therapy provider to see if they can work something out with you.
Yeah, I'd also throw in there with my daughter, she's 11 now, but when she was 3 and she was aging out of early intervention, we had a transition to the school system.
Yeah.
So the school, your local school, your district will provide PT, OT, and speech services as long as they qualify, which they should.
Yep.
So definitely get in on that. And then we also were able to apply for the Medicaid waiver, which in Indiana does not go based off of your income at all. It goes based off the child's income, which is 0, and her disability. So it was a tedious process, and it took a lot of hoops to jump through, and we had to get denied and reapply. It was a headache, and I felt like there was no one really leading us through it. But
right.
Since then, I have found out that there are advocacy groups usually that you can find that will help you to walk through the waiver process, so that if you don't qualify financially for Medicaid, you can still, depending on your state, receive a Medicaid waiver. And since my daughter has gotten that, all of her services have been covered. So when our $60 per year run out on our insurance, Medicaid waiver picks up the rest. And it's been a godsend, because
yeah,
I don't know what we would have done without it. But also the school will do it. So reach out to your local school district.
Paxton does the same. So he gets private therapy, speech, OT, physical therapy. But then we also get services through the school. So he goes like preschool half days now, Monday through Thursday. So he's like in the classroom, but then while he's in the classroom, they'll pull him away for a little bit and do some speech, or they'll do some PT or whatever it may be. So, he transitions to start getting those services in school as opposed to at home.
Yeah. Are there differences between how a standard 529 and a 529A ABLE account are handled in the event that your child passes away?
That's a good question. I don't know the answer to that. I would imagine if you had other children, you could probably roll it to those children, the dollars in there. But I don't know. I'm imagining the website would probably be able to provide some information, should the child or the beneficiary pass away in either one of those scenarios, what you could do with the money. I'm sure it's defined in there. I just don't know it off the top of my head.
Are there options to get insurance to pay for out-of-state providers? Also, how do you cover things like feeding support?
I didn't hear the last part, Sarah, sorry.
How would you get something like a seating support covered? I'm guessing like a feeder seat or...
Yeah, so 2 parts. You can't really buy a plan that you could buy a plan that maybe has like a broad national network, but if you have a plan in your state already, like let's say your primary insurance for your child is state Medicaid, I don't know if you could necessarily go out, and it probably wouldn't even be financially advantageous for you to go out and then purchase another policy for your child. That would probably be cost prohibitive. I imagine you wouldn't get a good return on that. So that's a tough one. It kind of depends on what the scenario is, like what your primary insurance looks like. Is it an HMO or is it a state Medicaid program? With the support stuff, and Sarah, you probably can chime in on this too, like through like 0 through 3, if we just asked for something, they just got it done for us. I don't know, like our school district was really awesome. They've been awesome throughout all this, but we said, they're like, well, we think Paxton needs a walker. And then like 2 weeks later, like a brand new walker would show up at our house, or Paxton needs, this type of seating support or this type of chair, whatever, like this stuff would just like show up when we asked for it, or when they actually just told us that we needed it. I don't know if that's how it works everywhere. That's kind of how it worked for us. I don't know if you have any input there, Sarah, too.
For getting things like that covered, when we were in early intervention, I feel like we were able to get a lot more covered. But yeah, I can't think now. I'd have to look into that and see if there's something specific. But like you said, I feel like so much of that is state specific.
Yeah. I don't remember a scenario, at least over the past 4 years, where we wanted something and we weren't able to get for it. I mean, sometimes you have to push people a little bit if it's like your early intervention folks, or maybe it's your insurance plan.
You could probably call your early intervention provider and ask them, because I would assume that they have all of those resources to be able to.
Or if it's like a special chair because of like feeding issues or what, maybe like talk to your pediatrician, because they can write a script for things too. Like we've done, like they write the scripts for like the AFOs, like for weak ankle, for ankle support. They write the script for, I'm trying to think what else we did. Probably the walker. Like a lot of times that stuff will flow through your pediatrician. So if your pediatrician's writing the script for it, it seems weird to write a script for, like a seat, but if it's medically necessary and the pediatrician agrees, then insurance would cover it as like any durable medical equipment.
Yeah, that's a good point. Okay, let's see. We have a couple more questions. This one says, we have primary job-based insurance, PPO, with no out-of-network benefits and backup state Medicaid. That must be someone who was responding to a previous question. Primary job-based PPO with no out-of-network benefits and backup state Medicaid. Faith, I can't remember what your previous question was. Oh wait, she was the one asking about the accountability for the ABLE account and, sorry.
No, you're.
Another person said, not a question, but I found that any medical equipment or devices are better covered through Medicaid instead of through private insurance. I would agree with that. If you have Medicaid, if you can get it, usually they will cover things more than private insurance. There are times though that I will personally call our private insurance provider and try to get things like that covered. Here's another question. What levels of life insurance are appropriate in your view?
That's a great question. So one thing I didn't hit on, and I'll just really talk quickly about them, but it's just like what I'll call like ancillary benefits. So this isn't your health insurance, but a lot of times employers will offer things like disability insurance, long-term disability, LTD, short-term disability, voluntary accident, life insurance. As you get into the open enrollment, like you should really think about these things. You got to think about like, so I'm like kind of I earn most of the income for our family. So if I go down, I'm disabled or whatever, or I die, certainly like there's going to be a large void in the income coming into our family. So, we fund it through, I think, a couple $1 million worth of life insurance, and like term life insurance is relatively cheap. So I bought like a couple 30-year term life policies. And so these cover me, I think I bought them probably 5 or 6 years ago now, but they cover me through age 65 and they're each about $1 million. And so if I pass away, like that flows into the estate. And then, ultimately it's like Sam and the kids. That's a very specific question that you'd have to talk to your financial advisor about. Like if you own your house and have no debt, you're going to need much less life insurance than if you're, leveraged highly with debt and have, 4 kids like me and car payments and college on the way and all those things. So it's a great question to ask. It's very dependent on your personal situation and what that looks like and what your savings today looks like and what you hope to accomplish for your kid if you were to pass away unexpectedly. The other piece of that is the disability benefits. Like if you can't work anymore, this type of insurance comes in and then it essentially pays you a paycheck until you can work again. Or if you can't work forever, it'll continue to pay a paycheck to you for the rest of your life. So again, like that's not like fun stuff to think about, but a lot of times employers will just offer that standardly to you. You don't really get a choice. Sometimes it's called like voluntary benefits where you have to elect and then pay for the benefit. But you should really think about it like if something was to happen to me, not even just die, but I can't work anymore, in my chosen field. And all of a sudden I go from making, $60,000 a year to $0 a year. Like, how are we going to fill that void until I'm able to get back up on my feet again? So thinking about some of these other things that your employer offers you is pretty critical, especially right now with open enrollment around the corner.
Yeah. It looks like we have two more questions. Can you set up an HSA with your local bank? Where do you set up this type of account?
Yeah, I think most of the time it is set up through a local bank. A lot of times, so depending if the insurance is through your employer or not, your employer may have contracted already with somebody to offer the HSA. I think you can actually go out and set them up on your own too. I mean, you have to be like qualified for, through having a high deductible health plan. But yeah, I mean, local banks have them. I know the bank I bank with has, they advertise their HSAs all the time. But I would first, if you're getting insurance through an employer, I would first check with your employer to see if they have a required or preferred bank that they want you to work with.
Okay. Another question, is there any advantage to having grandparents' will or IRA beneficiary leave assets to my child's special needs trust instead of me?
Yeah, I don't know if there's any benefits, but certainly funding it is, I mean, that's additional forms of funding that would exist for your child. So yeah, like, again, you'd want to structure that appropriately so the government's not looking at that money of that child and calling it an asset and then denying them benefits down the road. So you have to structure that stuff correctly. But again, that's what like an estate planning attorney can help you with.
So I lied, there's another question.
Take the whole day off, so it's fine.
Okay. It says, well, it's a little bit more of a statement, but I think she's needing advice. My son is aging out of Virginia's early intervention program in April, but we've been told he won't qualify for the next step because they base it on intellectual delay as one of the categories they look at and isn't significantly enough delayed. So it sounds like she's having a trouble getting into the school district's support.
Yeah, that's certainly like not unheard of, right? I mean, the only solution you have there is just to fight or ask for a second opinion. Like that's, I mean, I'm just looking at Paxton personally, and I don't know this child, but I know Paxton at 3, and Paxton still had pretty significant needs that would not be met in like a normal 3-year-old classroom. I mean, it was very obvious that Paxton needed some additional help. And so I don't know, you're that person's particular situation, but if that would have happened to me, I probably would have been calling the superintendent or the head of special ed for the district.
Yeah, I agree. I feel like we hate to do this. We hate to focus on our child's greatest deficits, but in situations like this, it's where you pull out the big guns and you want to get as much support as possible. And if I was in your situation, I would throw out the problem that, if they're only looking at the fact that he doesn't have, this question says that he doesn't have more than a 6-month delay intellectually, I would ask them to evaluate my child and to see, Lily, my daughter, had a significant speech delay and she had significant fine motor delays. And I would basically argue that with those two things combined, it's going to lead to an intellectual delay because she's going to be delayed in everything if she can't communicate or hold a pencil. So they really need to look at the whole child and not just decline them based on one category.
Absolutely, yeah.
I would definitely push back. She said he's just not in the more than 6 months in each category for fine motor, gross motor, speech, and intellectual. I would still continue to push at that, and I would participate in the evaluation. Don't let them do the evaluation without you. Participate in it and point out every single thing.
Yeah.
If a child can't hold a crown appropriately, point that out. If they can't color in the lines, point that out. Like every little thing that you can put on the evaluation to help, because the fact is our kids, they do need the support. They're going to need it. And it's wonderful if he's not more than 6 months delayed in each category. But it doesn't mean that he'll always be in that place. So I would push and push and push to keep.
And it's very subjective too. I mean, those types of assessments are very subjective. And so I know like when you get, like you were talking about earlier, Sarah, but you get the call every like month, like our waiver person calls me to see like what's going on. I make sure I don't paint like a super rosy picture. Like I don't lie, but I make sure to point out really strongly like where Paxton's struggles are, right? Again, like I'm telling the truth. I'm just making sure they understand like his difficulties and how that impacts his life.
Yeah. We had somebody comment on that question about the advantages to having the grandparents' will or IRA leave assets to the child's special needs trust instead of them personally. And the comment said, yes, there's a huge IRA passes at the current tax rate of the recipient. Above my head.
At the same time, yeah.
I believe that is all the questions. I can do a quick run through to check and make sure I didn't miss anybody. But I think that we got them all.
Okay.
If anyone has anything else they want to add in quickly, feel free to. Otherwise, Brian, thank you so much for participating today, for joining us, for taking the day off, getting in here. It's so nice to talk to you, another parent. I always feel like you're so relatable for the parents, the new parents, and especially the dads who, you know, you guys don't spend as much time chatting through the week as.
Right. No, we don't. Yeah. Well, thank you, Sarah, and thanks everybody for joining today too. I enjoyed talking at you. Hopefully next year at the conference, I'll be able to talk with some of you. And again, like I'd encourage you to go. It's a great experience, and hopefully I'll see you there next year.